Hello, I'm Angeline Ong, and welcome to your look ahead to Wednesday, the 31st of January. Now, it's going to be all about what happens overnight from those tech earnings. However, when we get to the start of the Asian session, it'll be Japan that will be the focus with industrial production, retail sales, and consumer confidence numbers out. Just taking a look at the Japan 225, which mirrors the Nikkei. The Nikkei did end slightly higher on Tuesday. This is as chip stocks tracked those overnight gains on Wall Street. The Nikkei has also had quite an amazing run. If I can give you a wider picture here, let's just widen it out to a monthly chart. There you go. As you can see, what a climb for the Japan 225, the Nikkei, in the last few years. The Nikkei is also at this point starting to kind of lose momentum because investors are hesitating from any buying towards the end of the month. And of course, there's all that caution ahead of the Fed's decision as well. Now to Australia, where we've got the RBA trimming its mean CPI, fourth quarter expectations 4.3% year on year. And also from China, of course, the focus will still be on Evergrande and whether there is going to be a ripple effect from that. At the moment, we're still watching that story as it unfolds. We've got MBS manufacturing and services PMI, factory activity forecast to remain in contraction territory for a fourth straight month in China. In Germany, we have the inflation detail as well that we're watching out for, and retail sales and the unemployment rate too. And from the US, watch the ADP ahead of the all-important jobs report out on Friday. We also have the Chicago PMI and the EIA crude oil inventory report, and of course that Fed interest rate decision. No change expected, but the expectation of a March cut, although it's been dialed back, still holds. In terms of earnings, we are going to start off in the UK with GlaxoSmithKline. Glaxo's chart, as you can see here, let's give you a daily chart, has been one that has been in a consolidation pattern since around the 5th of January. It is starting to try and break out from this consolidation pattern. And the next level that we're looking at is around 1581. This would take it up above that level. And if it breaks above 1581, well, then we could see quite a big sort of leg up. That's the technical view. However, in terms of fundamentals, the company is expected to report an 8.6% rise in revenues to $9.4 billion from $8.6 billion a year ago. This is according to LSEG data. What it says about where the new revenue pipeline products is going to come from will be key, given that Pfizer, just checking on those earnings, have just trickled out. They've had positive numbers, but the shares are rather volatile. And last time I checked, they had tipped to the downside. From Europe, we also have H&M out with full year results, Novartis and Santander as well. And from the US, look out for Qualcomm and Boeing. Boeing's a big one out of the US. Let's just show you the chart here. This is the daily chart for Boeing. As you can see there, it tracked that big rise like the main indices from around October onwards, but hit turbulence, mind the pun, after we had that Boeing issue, the blowout that left passengers staring at an open space 16,000 feet above the ground and forced pilots to make an emergency landing. Boeing has said that it is withdrawing a request for a key safety exemption that could have allowed US regulators to speed up the certification of its coming 737 MAX 7. This is the latest fallout from the plane maker's ongoing crisis. So we'll find out what it says about the outlook in the coming session. That's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Jeremy Naylor will be on at 7:30 for early morning call ahead of the European market open. Follow me on Twitter. This is IGTV.